Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the December 15th stock market wrap-up. First off, let's start with the S&P 500. Today, the market ended up opening up quite well, selling off intraday. But as you can see via the tail, for the fourth session in a row, as prices came down to the lows of the session, it was able to find some support and late in the day rally off those lows, giving it not as weak of a close. So the S&P 500 was down 1.3% today. What does the price of the index? What is the price index enabled to get above? The 50-day moving average. So as long as this white line stays above these yellow price bars that you see here, there is no way you should be thinking, I'm going to get hugely long. The time to get long, if there's anything you like out there, will be if we retake the 50-day moving average. That will mean that we will probably attack maybe the 150 or 200-day moving average. But I don't know if we'll be able to get up to the 200-day moving average. I hope we do, but I don't know. Right now, the best chance, the way stock charts are looking and the way my shorts are acting by not giving me any full covers and not having any new longs today is that the market's going to probably roll over here. It looks like it's slightly starting to roll. Let's look at the Dow Jones Industrial Average. We'll see it was down 0.75%. You can see the 50-day moving average is halting it right at its steps. And even though it's got some bullish tails here, it's getting a little weaker each day, and it's possible it could roll over. The NASDAQ has a little bit better look, and that can be shown in the relative strength line as we see down here, as it's moving higher instead of moving lower like when it was when the NYSE and S&P 500 were outperforming it on a relative strength basis. But as the market moves up, volume continues to get lower and lower and lower. The good news is the sell-off today is on lower volume. The bad news is there's no accumulation. And to be honest with you, stocks that I told you were possible future longs last week have basically been cut in half. They've either lost beautiful green bop here at the bottom, or they've had a price and volume problem that's eliminated them. So it's sad to see that some stocks are not going to probably become longs that I thought could be longs. And there were a couple of potential decent setups, and they're gone. S&P 600 down 3.2% today. Never good to see the small caps leading to the downside, 3.41%. Russell 2000 can't get above the 50-day moving average. The Vixen jumped today back up to 54. And the VIX jumped a little bit, but not nearly as much, up to 56. So if we start to sell off, I believe we'll retake the 50-day moving average. And I don't think we can start talking about a low until we hit new highs on the VIX that we had here of 89.53. Until we hit the excuse me, 90 to 100 range, I just don't see how we're going to have a bottom. Because for some weird reason, people are not fearish out there. And that can be seen in the put call. The last time they were fearish was back in March. The put call hit 1.5 to 1.6 right around there when bank stocks were collapsing, and when my accountant was telling me that he was going to load up on bank stocks, and when that wonderfully nice lady told me that I was an idiot for going short stocks and that I should be buying bank stocks. Sandy Wright was oh so Sandy wrong about that call. But now let's go ahead and move on from these indexes and get to the metals. Platinum, very close to looking like it wants to retake that 50-day moving average. The consolidation area here has been very flat, which kind of makes me think that it might not resolve itself to the downside. What else makes me think it won't resolve itself to the downside? Silver. As soon as it takes the 50-day moving average, you go long the next day, got a 4% gain. How's gold looking now? Wow, just continues to build on it. If you went long gold, right here, you now have a 3% gain. And if it takes over the 200-day moving average, you can add to the long. If you went long here, granted, you did get hurt once for a 6% loss, but that 6% loss now has been almost been made up with an almost 4% gain. Hopefully, if it takes out the 200-day moving average, that loss will be taken care of. And then considering the last uptrend it had, gold might be ready to run here. I mean, look, this is a weekly chart I'm bringing up now. Very roundish base here and on the last sell-off, and now it's kind of rounding out again. If it completes this base and breaks out, gold could easily, in my opinion, run to 1500. I just, by looking at measured moves just from the last movement up and everything, I wouldn't even rule out 2000 gold. But it needs to get above the 50 200-day moving average, and then the next long would be when the 50 crosses the 200. Any retesting of the 50-day moving average would then make gold and add. Let's see how much time I have left. Wow, this is going to be a quick one tonight. There really isn't a whole lot else I have to show you. NYSE, we can't get above the 50-day moving average. We're selling off on lower volume. Platinum starting to look bullish. Silver starting to turn very bullish. And gold already looks like it is bullish again. So we've got those metals doing... that's what I want to show you. The last thing. Not a good sign either for those of us in cash. United States dollar continues to sell off. In fact, in 5 days, or in 6 days, it's down 5.53%. And those 6 days don't look good on this chart. The good news is we're still above the 200-day moving average. The other good news is as it's sold off, we have tails in every single day. 1, 2, 3, 4, 5, 6 days down, 6 days a minor tail. See these closes near the low of the day? Here, 85.87. The low is 85.79. 84.72, 84.73 close. We're not having that here. We're bouncing off the lows, putting in tails. So hopefully it can find support here and move higher. And maybe gold can move lower for those of us in cash. And hopefully stocks can build bases. But I want to show you how rough the market is. If you're not cutting your losses, ISYS just compounded it today by losing another 15%. Those of you that thought it was smart then to rebuy AXYS today, you've now lost 6%. Do not buy stocks below the 50 and 200-day moving average. The only time you should buy anything under the 50-day moving average is if an ETF or a futures crosses above the 200-day moving average. If the 200-day moving average is below the 50-day moving average, then you can go long a little bit. But only unless the future is above the 50 and 200-day moving average would I ever take a full position. Still, the retaking of a 50 or 200-day moving average at all in any future is an area to go long or short, depending on when it does. So with the dollar, you might have gone short a little bit whenever it closed below the 50-day moving average. If you did that, in 2 days you have about a 2% gain. So it just depends on how you want to play the market with ETFs and futures. I do plan on having a futures and ETF service in the future because my picks on futures and ETFs have been excellent. I have not played my own picks because I do not have the appropriate amount of funds that I believe that I need to venture out past stocks, which I'm really good at, to enter a new field that's still kind of up in the air since I've never really put real money on the line in these markets. With the futures market, I have. That was back in 2001. Since then, I haven't. So I think I'll start a service, see where we're going. I'm going to watch my futures and ETF trades for a while, and then I'm sure I'll start a service because, as my Platinum members can attest to, we've had some great picks. And in 2001, after the 9/11 attacks, I told Mike at Kula Gold Company in Maui that he should load up on his gold inventory. Don't know if he did, but the thing is, at least he can confirm it that I said to load up on gold. I didn't do that, and it didn't matter because 2003, 2004, 2005, 2006, 2007 were great years for me. Not great 2007, but whatever. It was okay. In 2008, it's not been good, even though I do have 2 accounts up. 3 accounts up. 2 accounts barely down. Still not a good year, period. It should have been a lot better. I should have made more money on my shorts. Anyway, we do have 1 new short for tomorrow. That's going to be profiled in part 2 for members only. Remember, folks, December 31st, I'm ending the 25% off. It does say monthly, but heck, I will apply it to an annual subscription with 1 month off. So you'll get 11 months, 25% off for a full year. You can't get 10 months, 25% off because that's ridiculous. I'm going to rip myself off, and I can't have everybody in every single long and short that I give out there. So if you want to take advantage of this deal, remember, as of December 31st, it will end. We will not have any more deals until next Christmas, and that's only if everybody else is doing it. If everybody else isn't doing it, I'm not going to do it. This is Joshua Hayes at BigWaveTrading.com. We're on the right side of the market. Don't give up. Stay positive, and we'll go get them tomorrow. Aloha.